one of the things that I've heard from policy contacts is they're quite, and even Bloomberg's written about this, they're central bank guys, they seem to be quite happy about allowing the curve to steepen, right? So, and I think that comes about because of a visceral, my understanding, talking, as I said, talking to mates who talk to these guys still, is that they've been deeply, deeply worried about bubblicious stocks, right? So the idea, let the kind of curve take some of the strain, and everything will be fine, and it'll all settle down. Well, maybe we can, but it is going to be like, threading the eye of the needle. It's bloody hard to do it, to just have Apple, Amazon, Tesla, Netflix, Nvidia, all these things drop and everything else kind of rally, and not create some sort of like VAR shock across portfolios so that everything drops.
It's good for banks, though, right? It's good for the Wall Street guys. And the fact of the matter is the growth tech stocks, they're much more sensitive to the 30-year than to the 10, or much less so to the shorter term rate. So some of this could be sort of assuaged by a rotation of equities.
Yeah,
obviously, it's painful
hard
in the market cap weighted world that we're in with the S&P. They've occupied such a large part that if they fall tremendously, or even in any meaningful way, that brings the whole market down, even as the other portions of the market are catching up.
I'm not sure if I'm right, but I listened to Bloomberg this morning driving my daughter to school, and they were saying that I think it was Amazon and Apple are equivalent, and I might be wrong on that, but they're basically equivalent to banks and industrials. So and so this is the problem, right? I mean, don't get me wrong, we've been fans of that cyclical rotation trade, but it's kind of hard to do it with these relative weightings, right? With these relative weightings. And so I don't think we've seen even a capitulation in some of these tech names yet, right? I mean, you can just look at it. I mean, yeah, maybe I was looking at like the VWAP, the average price that something had been bought over a period, right? For ARK, right? So ARK K off the lows, right, of March, the VWAP comes in at, I think it was like 117.60, right? So that means that this morning, not sure exactly where it is now, but this morning we were half the stock purchased or half the stock traded since the lows of March was underwater.
Right. So 50% of the people who've been buying over the last year
were losing money
right now.
Right. We're losing money. And the thing is you haven't seen a capitulation. If you look at the flows, you just haven't seen a capitulation. If you look at vols, look at the VIX, look at positions in VXX, right? Shares outstanding in that. There's been no capitulation yet. So I still think this is a gift that keeps giving, and this is nowhere close. The Fed can't capitulate with the NASDAQ down 10% bloody. They don't give a shit about where Tesla is, right? Tesla could go to zero.